Hello everyone and welcome to my daily report market analysis videos with me, which is market analyst at Hantec on Tuesday the 3rd of March. There's been a significant bounce back on Wall Street last night, a huge rally into the close. 4.6% higher on the S&P 500 up to 3090 again, 5.1% bounce on the Dow, 1,293 ticks higher. Biggest points rally, certainly since the great financial crisis of 2008, and just an enormous rebound. You can see the magnitude of this move that we've seen on the S&P 500 just in the last 2 days. Really, look at that rebound. And it's continuing to climb today. Futures are another % higher today, and that really is helping the European markets take off in their recoveries. Now, there's been a big turnaround. It seems as though that the central banks are going to be engaging in some sort of coordinated action, whether it's deliberate or not. Certainly seems as though that is the case. You've got 50 basis points priced in to the rate futures market for the Federal Reserve now at the next meeting. You've got the Reserve Bank of Australia, which cut rates today, first mover there from the Reserve Bank of Australia, and it seems as though that banks such as the Bank of England could well be following suit in a rate cut. The question would be whether the ECB could do so. At the moment, there's no pricing for a rate cut at all from the from the ECB, really. Maybe 5-10 basis points, but I mean, whether that will happen or not, whether the ECB thinks that that is a good move, and that is one of the reasons why we've seen euros strongly higher in the last few days, really. The inability for the ECB to really do much on rates, so the differentials have moved in the euro's favour in that regard. But certainly the rebound that we've seen has helped to stabilise gold. Gold had a massive sell-off on Friday, but found a basis of support today and yesterday, and we've seen that the prices looking to retest the $1,600 area once more. So really strong turnarounds also seen in the oil price. That oil rebounding from that low that we saw yesterday. That's again higher today, and it's starting to sort of pull higher, and again that sort of reflects this improvement in risk appetite that markets have taken on board from the expectation of this dovish action. But the real impact is seen through treasury yields, really. Look at that huge move to the downside on the 10-year, around about 50 basis points on the 10-year. But if you look at the 2-year, it's something in the realms of 70 basis points, and that is a bull steepener on the rate curve, on the yield curve, sorry. And you can see that through the 2 to 10 spread, moving almost 20 basis points to the upside, and a really strong move as the markets are pricing in dovish central bank policy. So lots going on there. But in terms of data points today, we've got the inflation data for the Eurozone, and that is, or it was a couple of minutes ago actually, and it came in line with expectations at 1.2% for core and headline. So no real shakes there from the Eurozone inflation data. And then this afternoon we've got Loretta Mester, who historically sits on the more hawkish end of the FOMC scale. So she's speaking this evening, or this afternoon if you're in US hours, but this evening, and she will be a good gauge, because I think if someone like Loretta Mester starts to talk about rate cuts, I think we can start to assume that there will definitely be a rate cut from the Federal Reserve. So let's have a watch out for that today. Okay, so that's on to my chart of the day, which is the Canadian dollar. Wow, we saw a big move to the downside yesterday, and it certainly looked as though this was possibly a corner changer. What we've seen is the move basically just back into what is now a support band. This old band between sort of 33 figure, really up to 35 figure, was really tough for the market to break through. It did that during the dollar rally previously, but the dollar's now started to correct. I say the dollar rally, and also coming at the time at which the oil price was plummeting, and the links between Canadian dollar and oil are fairly tight, and the correlation is strong. So subsequently, the dollar Canadian has come under some significant rallying pressure to the upside. But the market turned a bit of a corner yesterday as the oil price started to rally. So it certainly seems to be a bit of an oil mover. But interestingly enough, Canadian dollar is maybe not really moving today as you'd expect, given the fact that the oil price is, again, very strongly higher, 2.5–3% up on oil now. Canadian dollar not really showing that strength. Dollar Canadian back up. But you can see this testing of 33.50. It seems to be a bit of a leveler in terms of a crossroads moment, I think, for US dollar CAD, and how the market responds to this support at 33.10 or the resistance at 33.50 and closing, which way around that will be important. At the moment, it's just edging through that resistance at 33.50 again. You can see here on the hourly chart, it's sort of the corrective move from yesterday started to stabilize a bit, but there is still this run of lower highs. So for the dollar bulls to really get control of this again, you need to see a move above 33.95, which was yesterday's high. You also need to see MACD lines above positive, ideally, RSI above 60. Things, little improvement momentum indicators on the hourly that we'd need to see for a more of a conviction move, because at the moment it seems to be once more trading around this sort of ranging pivot, 33 figure to 33.50. And how the market resolves that ranging pivot will be, I think, important, because a closing breach back underneath at 33.10 would pretty much open a retreat back to the uptrend. And with these momentum indicators rolling over to take account of this corrective move yesterday, you could see there is downside potential in a corrective move. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos, and also go to our website to sign up for our webinars.